All right, welcome to this episode of Market Shares. I'm back with Anton Stetner, and this is going to be, I think, a really fun conversation.
Get into it.
We're going to get into it because I'll tell you one thing about Anton. He's a great real estate agent. He's a friend of mine. We always like to geek out on the market and all that stuff, but I'll tell you, the best conversations I have with Anton are about doing deals, right? About investing, not selling or financing transactions or helping borrowers, but finding deals for yourself, right? And structuring those deals. Yep. I'll tell you this, I wish I knew Anton back when I was building my real estate portfolio, because he probably would have told me not to purchase half the houses that I did. Because every time I call Anton with an idea or with a deal, he's so, thoughtful in how he goes through whether or not it's a good deal for the given market, what your goals are. Yeah. And I want to share some of that with the audience here today, because Anton's wicked smart at this stuff. And there's one person who, if he calls me up and says, hey, I want to do a real estate deal, are you interested in partnering with me? The answer is always yes, because I know that it's vetted out. I know it's a smart deal, and I'm always there to do deals with you, Anton, because of just the approach that you take, and I think it's unique. So, and I think people can learn a lot. But let's talk about this. I mean, look, we're in a little bit of a depressed market right now, right? Yeah. So
the market's taking bullets. We're taking on water.
Yes, yes, it's a little scary out there.
Turn the bilge pump on.
Yes, but yet people. People have cash. There's people that want to invest. People see and hear that there's opportunity in the market. Yep. But I think that we got to be careful, right?
Always.
Not everything's an opportunity. So maybe let's start by talking about the types of deals that maybe you've done in the past that you might stay away from this cycle right here.
Good question. The main things we're avoiding right now is flipping and new home building.
Okay.
And the reason for that specifically is that flipping right now, your cost basis is so high into the acquisition that you've got to be able to purchase that property at such a significant discount. Now, can it be done? Absolutely. If an awesome flip landed in my lap, would I do it? Yes. Are we actively hunting them right now? No, I'm not. And the same thing applies to new construction. It's hard to build new construction right now because, the developer bought the land for a certain price. They did the development, so their cost basis is up here. Well, that means I've got to be up here in order to build that house and sell that today in order to make the margin. Well, like we talked about in the previous episode, with that price compression kind of happening here in the Seattle Metro and nationally, there went your builder profit. Okay, so if I'm getting into a flip or new construction today, I've got to be able to buy it at a significant discount, and I'm going to give you a specific number, 20 to 30% less, so I've got a margin of safety.
So 20 to 30% lower than what the fair market value is?
Not just the fair market value, the today value of it in its current condition. So if we're talking about a flip, let's just say it was just worth $200,000. I've got to buy that for $160 to $140.
Wow.
Okay, that's the type of discount you need to get in order to ensure you've got a margin of safety coming in. Because if you're a smaller, unless you're Godzilla, I mean, if you do hundreds of these, this is a different story. But if you're doing 1 a year, 2 a year, 10 a year, 1 or 2 can mess up your whole machine and take you out.
Oh, yeah.
So this is where myself, our investors that we work with, and then the investors we sell projects to, we're all cautiously optimistic, and we want to buy with a margin of safety.
So even if I did a flip 2 years ago,
yes,
another one a year ago, it went really good.
Yep.
Today, you'd be a lot more cautious.
I would be 4 times more cautious than before because that market was going up. So the rising tide was lifting all ships. And that market made me look like a genius.
Right.
And I made probably above average returns. Now we're going to a tight market, that's having price compression, but you've still got wages trending up. Some materials are still not available. Okay, now some materials are getting cheaper, lumber, things like that. But not everything is equalized out yet, so I just need to be very careful and diligent on my numbers, and then I would hand them to one of my friends, my business partner, someone else, and be like, here's the deal I'm going to do. Would you do it?
Right.
And then get extra feedback. You know, like we talked about previously, go connect with other investors, other real estate brokers, other mortgage professionals, and get their opinion on the things that you're doing. Maybe still do the deal, but do more analysis.
Got it. Okay, so maybe now is not the right time to be looking for flips. However, I want to stay with flips for a minute because a few of the projects that we've discussed and talked about, I mean, you've actually been able to do flips, maybe not looking for them today, but where you haven't had to put any money into the deal.
Yes, sir. I mean,
like how?
Tons of them.
Well, no, so tons of them, right? So there's a lot of time. People hear this, they go, "Well, you don't have to have money to be an investor," like you know, blah blah blah. And people go, "That's kind of BS." Like you kind of have to. So, can you just walk us through how is this possible?
Yeah.
How do you find the funds available to do something like that? And I understand it may not be the season to do it today, but if someone wanted to take notes on how does that actually work. Can you unpack that for us a little bit?
Once again, I would do it today with that margin of safety.
With the right deal. Okay.
Bingo.
Fair enough.
So the right deal caused me to do it. So, you know, if we know our goals and our criteria, we can get very specific. So if it meets my criteria today, I'm still doing it. Now, secondly, I think that real estate investors, now this doesn't matter if you're a wholesaler, mortgage broker, you don't have a license, you got a real estate license, whatever. You have to create deal flow so you can create opportunities. So, you know, think of it as like a large scale funnel, right? So I've got this funnel and I've got to feed in suspects at the top. Some of these suspects turn into leads. I analyze, so I put in 100 suspects.
So you're like prospecting.
Prospecting, exactly, okay? I spoke with another builder developer yesterday about her projects and she said, hey, I've never done the acquisition side. What would you do? I said, real simple. I would create a list of the people that I'm going to call. I would call everyone on the list. I would text message them. I'd send them a postcard. I'd send them a letter. And then you're going to get some responses. Let's just say you got 100 responses based on your first level of communication. And I would do each one of those 2 to 3 times. So in somewhere between 8 to 12 touches. Out of those 8 to 12 touches, let's say I get 100 suspects, people that respond in some form or another.
These are just reaching out to whom?
Well, if we're talking about a flip, I'd be looking at properties with out-of-state owners. Okay. I'd be looking at properties where the tax assessed value for that one is significantly less than the surrounding neighborhood. So if the whole surrounding neighborhood's tax assessed for $600,000, this one's tax assessed for $400,000, it might need a remodel.
Got it.
So out-of-state owners, tax assessed value, touching your sphere of influence. 25% of my deals come from my network. People know what we do. They bring us deals.
Got it.
So put in my 100 deals, or put in, 500 touches. I get 100 suspects. Out of those, 50 turn into genuine conversations. Out of those 50, I'm probably going to look at 10 to 15 of them where I'm actually going to run the analysis. And what we do, once again, is we've got everything laid out where you go into the spreadsheet, you put the numbers into the spreadsheet, and it basically turns green or red.
Got it. Okay.
Simple. Green we buy, red we don't. And that's based on our investment criteria that we've developed over time for that particular product. On a flip, I want to make 15% on the as repaired value.
Okay.
Okay. I'll do 10 if I don't have to do all the majors. Okay, all the majors are roofs, electrical, plumbing, structural, foundation.
So if it's more of a cosmetic fixer,
10%
10% would be okay.
Rock and roll, let's go. So after the analysis, I'm going to make offers on anyone that meets the threshold. Let's say I make 10 offers. You're going to make 10 offers and you're going to get 1 or 2 in today's market.
Okay.
I could push harder in the previous market because everything was going up. So this is just cautiously optimistic, slightly conservative.
Okay.
Out of the ones I get under contract, generally speaking, 50 to 70% we close on. Now, going back to how do you do this with no money?
Right.
Okay. If I have a plan and a process, and I can communicate that with other investors, and I show them, here's how we do it, here's the time frame we do it in, and here's the ROI that we get. Do people buy into plans?
Absolutely.
And then you can show them other ones you've done. And you literally say, okay, homies, I need to borrow, 350 grand, 250s for acquisition, 100s for the repairs, and then the finished value is, 485. After we do this whole thing, we're going to walk out with, 75 grand. Want to play? And that may not work the first time, but, we've been working with real estate investors since 2003. So you build up this track record over time.
Right.
And that track record is your street cred in real estate investing. And so when your street cred shows up with track record, numbers, and proof of concept, money rains from the heavens.
Right.
People will just do deals with you. In the beginning, maybe you do it zero down, but it's a 50-50 split.
Right.
Who cares? Like if you and the investor both made money, now we're to the point where, we just pay the investors, basically points up front and then percent on their money. But in the beginning, you need to do any deal you can that makes sense to establish that track record.
Right. So if you're willing to do the work and you're willing to go out and find all those opportunities, the out-of-state investors, you kind of come up with a formula on who might be interested in doing a deal. You're going to reach out to them multiple times, each person, create an opportunity. And by the time it gets down to the place where you're like, I know this is a good deal, if you don't have the money, but you're willing to share in the profit of the deal, there's money out there.
There is more money than deals.
Okay. So there you have it.
Money is always chasing deals. Your job is to be money's conduit to deals.
Right. So, but what I find is that the entry-level investor doesn't look for deals because they don't know where to get the money. And what you're saying is find the right deal.
Yes.
And the money's the easy part.
It's like rain in Washington. It's just everywhere. And so the next part of where this goes to, Tony, is people go, well, how do I know what a deal is? You learn the market. You study the market. You go drive by everything. So, basically you need to understand what are repairs in your market? How much does that cost? Start creating a little spreadsheet. And then every time you do a flip, you run the numbers against that. Hey, here's what carpet cost. Here's what trim costs. Here's what electrical costs. Because if those numbers start to trend up, maybe you need to start changing profit margins.
Yeah, totally.
Okay. So what do things cost? What are timelines to get the work completed in? Who are my awesome, trusted people? Trusted people are not cheap. The cheapest bid will cost you the most money.
Right. Take notes.
So my trusted good people that can get the job done in a timely manner. And then where am I getting my deal from? So you have to go hunt that down. So what does it cost? What's the market, both on the rental side, okay, both on the repair side, and then the finished value? Because you need a backup plan. Okay, I've got, because I told you about new construction, I got a couple houses right now that we're going to finish. Honestly, I can't sell. Well, I could sell them, but I'd barely make any money. I mean, we're talking like almost no return. So I said to my partner in those deals, I said, hey, let's just keep them. So plan A on my flip or my new construction is to sell it. Plan B is I'm going to keep it as a rental.
Right.
Okay, so maybe I've got plan A, B, and C as I go into a project just in case.
Right. Now, in that particular case, plan B, depending on where you got the financing, if it was a hard money structure or something like that, then you also have to have a plan B for the financing.
Correct.
Yeah.
You absolutely would. So in that case, grab another investor and pull them in with you. So in the one I'm specifically talking about, traditional financing from a local bank, it's construction financing on that debt. We'll just literally turn around and turn it to commercial debt afterwards, which is slightly less today than your conventional mortgage debt. They won't really cash flow. I mean, they'll probably just break even. But I'd rather have an asset doing something than to have to give up a little bit of money or the margin.
Right. Yeah. So have a contingency plan and think about the financing as an aspect of it. Okay. So hopefully this was super helpful because a lot of people talk about doing deals without cash. I've seen Anton do them multiple times. And so I wanted you to unpack that. I appreciate that. So let's talk about the opportunities that do exist in this market. If flips are maybe, only if you can get a huge discount, what would you be looking for as an investor? And is it time, or are we still waiting to see opportunities pop up?
If you're an avid investor, a deal is a deal when it's a deal, no matter the market. So if you're an avid investor, you need to get very specific about what is my short-term goals, what is my mid-term goals, and what is my long-term goals, and attach numbers there. And then create a criteria by which you purchase, whether it's a flip, a development deal, a JV on a multifamily, whatever it is. Then what happens is there's never a bad time for a good deal. So Are we waiting? Absolutely not. We literally closed on something on Thursday of last week. Phenomenal deal on 3 duplexes. Okay. Are we going to continue buying? Yes. There's 3 things that I really love in today's market. I'm looking for things that have big upside potential because they've been beat up due to a condition in the market. 2, I'm looking for opportunity where I can grab another investor's project, another developer's project, another builder's project, another flip project where they got stuck and fix their problems. And 3, long-term cash flow.
Is there a lot of these fixed? I mean, are you finding deals now where people are jammed up in the middle of a deal because
It's just starting.
Yeah, okay.
It's just starting because, like we talked about previously, that price compression is just happening. So people are just now starting to get jammed up. But there's a lot of money to be made in changing markets by solving other investors' problems.
Right. And then you just partner with them on the deal that might already be a decent deal, but they're out of cash or timing wasn't what they thought. Or
you can partner with them. Maybe they have to walk from the deal and sell it to you at a discount. Maybe the bank calls you and says, hey, this is getting ready to come up, and we need you to be paying attention to this because we need a buyer. Everything you can think of, solve problems, make money.
Yeah, I love it. All right. So what are your goals around investing? Like what, all these deals, are you, I'm assuming you have some that are just generate cash profit short term. Are you building a portfolio of long term that's kind of going to feed like a retirement strategy, or
ours is, I don't know. It's a little on the complex side, but to kind of simplify it down, we want to build or flip, 5 to 10 homes. Every 5 to 10 homes, we want to be keeping units, and then we're keeping those units for long term. So that's part of our building and flipping strategy. In ideal world, you buy like a 20-lot plat. You come through, you build 20 homes, you keep 1 or 2.
Right.
Phenomenal way to do it. There are lots of builders in our area that strategy is modeled after. Another strategy that we're constantly doing is the development strategy. So raw land, take the raw land to entitlements, and then we sell at entitlements, or we build the product and hold it long term, or we JV on the product with someone else, or bring in outside investors. So there's a multifamily one we're working on right now, finishing up the entitlements. The last step that we have is the structural engineering, 17 units for townhomes. And with that one in particular, we're going to bring in outside investors to fund that to then hold it long term. But so there's a construction strategy, there's a development strategy. The development strategy then has the 3 exit points. And then the overall one is Yeah, I want to own thousands of units.
Right.
I mean,
just thousands.
Just thousands.
Yeah.
And I got into real estate to be a real estate investor. I went to school to be a biochemist. I mean, I studied something completely different. I came to this field to invest in real estate because it attracted me, because fortunes are made and the trajectory of families are changed through the owning of real property.
Right. So you help a ton of families buy and sell real estate.
Yes.
But,
yes, sir.
But you got into the industry really to do deals.
Yes, sir.
Yeah.
100%.
Yeah. Well, I love that. And I think if you're a real estate professional or you're not and you're thinking about it, that approach, I mean, to get your license because you can help families buy and sell real estate is great. And you can make really good money doing that. But where the real wealth is built is by then taking your expertise of the market and the networking and really building your own real estate portfolio or flips or whatever.
And it's also because I'm long-term plans, okay? I'm very big into this idea of legacy. How am I showing my children how to behave and become the men and women I believe they can? And then also, I want to teach them about real estate investing. And then when I die, I'm going to leave them some assets that I expect them to take care of and push forward.
Right.
And that's the beauty of real estate investing. Whether you're a small investor or a big investor, small investor, if you just go buy a duplex or 2 duplexes, and then you leave that to your kids, and they understand how to use it, you're changing the trajectory of life forever by that cash flow coming in.
Yeah.
It's awesome.
I totally agree with you. Well, we could talk about this all day. You're one of the smartest people that I know around this topic, and maybe we will, come and depend on the comments we get and feedback on this episode. Maybe there's other things that we want to dip into, but I think you gave our audience a really good peek into, how deals can be put together. Look, there's always, I love what you said. Like, the right deal in any market is still a great deal.
It's still a deal.
Yeah. So I love that. If you guys have questions, you can always reach out in the comment section here. And Anton's a real person. He'll answer the questions, and we can even have him back on if there's certain things that we want to discuss about investing in particular. But I hope this was a good takeaway. I've learned so much from this guy, and I know that you can as well. And if you do have money that you want to invest, I still think real estate's a great place to do it. And turns out if you don't have money and you want to invest in real estate, there's ways to do that as well.
Just go find an awesome deal and someone will do it with you.
Find an awesome deal. Work hard, find the deals. All right, Anton, thanks again.
Oh, thank you, sir. Love it.
This has been great conversation. For those of you watching, thank you for your time and attention. It does mean a lot to us. Like and subscribe to the channel. Tell your real estate friends about this, and maybe share it with someone, and get together and maybe brainstorm ways in which you can start building a real estate portfolio for yourself, because it will change your life and potentially change generations for your family.
Amen.
Yeah, right
Love
on.
it.
Thanks, guys. Take care.